Hey traders, Jason here with Day Trading Fearless. Welcome back to my channel. If you're new, welcome. Make sure you guys hit the like button and subscribe. And in this video, we're going to go over the weekly watch list for January 10th, 2021. But first, let's check this out. Make sure you check out my website, daytradingfearless.com, to sign up for the $99 lifetime subscription special for the weekly S&P E-mini trade zones. These are zones where I give you resistance, support, open gaps, and open VPOCs for the following week trading. You also, in the member section, will receive a 2-hour trade zone training video course where I teach you everything about the trade zones, how to draw them, so you could trade any stock, future, or cryptocurrency. And you also get the member section with all the resistance, support levels, and things like that to draw on any chart. So make sure you check it out. Links down below, but right back to the video. Okay, with that being said, let's get into the weekly watch list for January 10th, 2021. I said last week, I was kind of like not bullish, not bearish, and it was kind of the right trade, but I also said if I lean one way, I'd lean to the bearish side. And I also said to watch for the 50-period moving average. Well, we made new all-time highs. We actually finally, after all these months of me telling you guys, we actually have a little bit of excess up here. Not a ton, but it was a very classic look above and fail. If you guys follow me all the time, you understand what this is, right? We kind of make a high, pull back, look above, and then fail, right? And you could have had a very, very nice trade. Let's zoom in here. If you just trade based off my principles of the reverse waterfall, we made new highs, right? Look above, new highs, and then just two candles with higher lows, and then this you would have gotten short there with the stop above here because you go, hey, this is a kind of indecision but more of a bearish pattern setting up. And also with the interest rates and all that, the Fed minutes came out and pretty much said they're going to be raising rates this year, taper down the market, and then it's just been kind of a sell-off ever since. With that being said, what do I think is going to happen right now? Well, guess where we close? Right near a high volume node, right? Do we continue lower, or is the market going to bounce? And I think from here, I actually, based on the RSI, remember we had that huge divergence that I kind of pointed out last weekend too. Well, it's starting to really play out. I actually think lower, and I think our first level of support is going to be around this 45.50 level, and then if we lose that, I would be watching this 44.85 level, right? This little swing low right here. Let's take a look at something I normally don't show you guys, but the VIX. Okay, what's the VIX doing? Very interesting, right? We kind of like, there's really no sell pressure. There's no panic. There's no fear. This is why I'm kind of like, on the board, because, or kind of on the edge of, I'm bearish, but I'm not. And one of the reasons being is because the VIX is not really telling any fear. Yeah, we had this pop, but look at this. I mean, dude, this is what happened the last pullback, right? We just kind of took off right? This, it's muted. We're barely moving. So with that being said, I think this might be a slow grind, but I will give you a hint. Watch the VIX. If all of a sudden the VIX, if we're down like 10, 20 S&P points and the VIX is up like 2 points, Okay, well, now something else is going on. But until that happens, maybe a slow sideways grind going into the early part of this week. So that's what's going on there. Let's take a look at the NQ. NQ coming down to the bottom side of this channel. If we break below this, I would definitely be watching for this low volume node right around the 15... probably the 230 level. After that, definitely the 200. This is where I think we ultimately go. Here is right around the 14,900 level on the NQ. Crude oil. Wow, look at this. I've been telling you, I've been bullish on crude oil. I said I actually like crude oil longer, and look at this. But with that being said, what happens? Indecision. Nothing major on crude oil, so I'm not going to make a call one way or the other on it. But this is kind of like, it's weird, right? The market fell, NASDAQ fell, and crude oil's up. Go figure. Usually they kind of all go up or down in tandem. This is probably one of my favorite charts right now is Bitcoin. Look at this. These are levels I drew in my last video last week. And look where we came, right down to my level, the first level of support, and bounced. Okay, I said I thought we would get down to this 40,000 level on Bitcoin. We're there. Now what? I actually think it keeps going. I've been buying crypto. Probably I nailed the top on it. Not Bitcoin, but a lot of these altcoins. You guys know in past videos I've talked about Zombie Inu. Listen, that thing was up 100%. A couple weeks, actually about a week and a half ago, from my personal entry, from what I was telling you guys, 7, 8, you could have gotten about 150% positive. I love that longer term, not for a day trade, but that is a long-term type of trade. But going back to Bitcoin, I think we're going lower. I think it wants to come down and at least fill this gap, and then maybe churn and clean up this market profile right there. So that's what I think's going on with Bitcoin. Be careful with all the altcoins, everything else. I think everything's going to just get hit. Right now, it's kind of liquidation of stocks and crypto, and probably let's take a look at what gold's doing. Gold, oh, look at that. Nothing, nowhere, right? Inflation's rampant. Gold's not even moving. Zero trade on gold. Silver, kind of same thing. Sideways action. Bigger pattern, head and shoulders, right? Shoulder, head, shoulder. Here's our neckline. Watch for potential fail. If this thing does fail, right, just grab your Fibonacci extension. These are the levels I love, 127, 161, and 200. And just look to the left. Do they match up with things over to the right? Oh, look, this 1618 was the high before the breakout. We've never come back down to retest this level, right? Maybe that 1770 level might be a good level to look to start buying if we get there. So we'll see what happens there. AAPL. Apple, nice divergence. I pointed this out last week. I said divergence, look above, fail, it's off. I would grab Fibonacci tool, same exact thing. I draw from this high over here to this low, that entire leg, all the way back up. And these are the levels on Apple I would be watching: 163, 158, and the 152 level. So those are levels to keep an eye on with Apple. So with that being said, guys, be careful out there. I think the market's going into a little bearishness over the next few weeks. Things aren't looking too great, but with that being said, look and kind of look at stocks you're looking at and look for buying opportunities on bounces. I don't think this is a market crash, anything like that, but I would love to see maybe a 10% sell off when it's all said and done. I think that would be very, very healthy for the market. So with that being said, thank you. Guys, have a great weekend. And until next time, we'll talk to you soon.